Let's head overseas and check in with our man, Tom Belger in London. Tom, stocks in China not having a good week despite the country returning to GDP growth. What's the latest there?
Yeah, slight rise in stocks in Shanghai overnight, but really only clawing back a fraction of the drastic declines you've seen this week. SSE composite benchmark down 5%. That's the worst since February. Some of this down to the souring in relations with the US. There's that possible US travel ban on Communist Party members. But China's state media also publicly attacked the liquor giant Mutai on Thursday. That sent stocks spiraling downwards. What's more important than the detail is that it's seen as a sign that officials really want to prevent a stock market bubble. And there's also question marks about how dependent on state-backed industry China's GDP figures really are, given the gap between the GDP data we saw that was better than expected and retail data that was worse than expected. And the other question being also, how long is that state stimulus going to last? Brian.
And Tom, where's the next European stimulus plan? I think a lot of investors are looking for it. Don't see many details on it yet.
Yeah, European stocks mostly up this morning. Euros hovering near 4-month highs on hopes of this stimulus package. But analysts really expecting progress rather than a breakthrough at this 2-day summit starting today. So we'll have to wait and see what happens because there's familiar divisions at play between the north, several countries more reluctant on the measures, and the south, who are obviously far more keen because they've got a lot more of a battle to get out of their downturns. Brian.
Tom Belger, thanks so much.